Welcome to OK Computer. I'm Dan Nathan. That's Deirdre Bosa. She is the host of CNBC's Tech Check, and she's here IRL.
In the flesh. I am delighted.
I know. This is amazing. It's been a long time since you and I have done this together. We do it remote quite frequently. I do like the view that you have there when you're sitting in front of the Bay Bridge at One Market and CNBC, but it's much better right here.
Yeah, and you guys have upgraded the studio.
We
Looks
have
amazing,
a little bit, so I appreciate that. Appreciate you noticing that. We got a lot to talk about here because it's a big earnings week tomorrow after the close. This is Tuesday. We're recording this. Monday afternoon is Alphabet. AMD is going to be very interesting. Also, PayPal. And then Wednesday, we have Microsoft and Meta. And then on Thursday, Apple, Amazon, and Uber, all names that you track very closely.
All ahead of a little presidential election.
I know. It's crazy. The week before, just a little programming note, I had Brad Erickson. He is the internet analyst at RBC Capital Markets. They are a fine sponsor of this program, but Brad's a guy that I've known for a while. I've tracked his work. He's really good. We went into kind of the sentiment into a lot of these names, what he's hearing from the buy side and the sort of whispers that he's seeing. So again, some really good price action by most of those names. Other than Alphabet, actually, for the most part.
No one likes Alphabet.
Yeah, so stick around for that conversation. All right, let's get into what you think the vibe is into this earnings season, because one thing that sticks out to me is that the S&P is basically very near an all-time high. It's up about 22% in the year. The Nasdaq's up 21%, but is yet to make a new high from July. So what does that speak to? The market's broadening out a little bit. We have seen the 10-year Treasury yield go from like 3.6 to 4.3 where it is today. So there's some headwinds to some of these mega cap tech names. I'm just curious, like you talk to a lot of folks, obviously in tech, but also public market investors. What do you think the vibe is going into the spring?
I feel like the vibe a little bit, like you said, the mega caps have taken a bit of a breather and the rally has broadened out. It feels like, it's the election. We are getting closer and investors are going to want to hold some defensives like utilities. Financials had a great earnings season. So that is probably a good thing for the health of the broader market. But this week, of course, is so consequential, right? You have the biggest names in the market.
All right, so let's talk about that. So let's break it down. From the election standpoint, which we might not have any sort of clarity for, let's say, a few weeks or so. Hopefully we do in the next week or so. But a lot of these names that we just mentioned, we have DOJ, we have FTC, we have a lot of, like the regulators are poking around. Alphabet in particular, we're expected some news maybe next month, but definitely early next year. How much do you get a sense of that weighing over the stock that's down 15% or so from its recent all-time highs?
I think it does weigh. And for years, I've covered sort of policy and these regulatory battles that big tech has faced. And it feels like in the last few months, finally, investors don't feel complacent anymore. They feel that Google could face some real headwinds and has. And I think the broader fear is not necessarily what's going to come down the pike in terms of those regulations, but how much energy and resources that they need to devote to it. Like Microsoft in the 90s, early 2000s, is that they're going to potentially miss the boat on the biggest platform shift that we've seen in our generation, right? Which is AI. I don't actually see evidence of that in the fundamentals, I will say. Google has everything. They wrote the famous Transformers paper. They should have beat ChatGPT to the punch. And that, I think, is what makes investors nervous, is that they have all of this technology, but they're not going to use it. They don't have the same kind of spirit, scrappy spirit that an OpenAI does. And to that point, I mean, last week, you saw Anthropic come out with this cool new product called Computer Use, basically an agent that can do stuff for you on your computer. Google answered back this week, but why did Anthropic beat it to the punch if it had all the technology?
Yeah, and I guess you're kind of speaking to the nimbleness in a way, you know what I mean? Like they're basically, they've taken investments, Anthropic, from Google, from Amazon. They have a lot of incentives, right, to kind of like ship product, if you will. The one thing I just say, and I think this is kind of interesting in this election cycle, last week there was a big hubbub over, the Washington Post, which is owned by Jeff Bezos, who's the founder and former CEO of Amazon, and he's also still the chairman. Now, we know that he's been, selling stock. His ex-wife has been selling a lot of stock and using it for a whole host of philanthropic sort of reasons. But he and, former President Trump, went to war for the most part, back and forth. And so a lot of folks were suggesting that, the decision, let's say a week and a half before the election for the Washington Post to not endorse a candidate, which they've done since 1976, was essentially Bezos, trying to kind of, curry favor with, a potential second term of Trump. I'm just curious what you think about that, because even if you think about how much scrutiny Facebook came under after 2016, Twitter, obviously we know what Elon is doing right now in this, cycle, but Tim Cook, who was behind a lot of the mega cap tech CEOs were basically, they were behind Hillary in 2016. Yes. They've been kind of non-existent in this cycle other than Elon. And I'm just curious, what you take away from that.
Well, remember, you're right. I go back to 2016, and then when we had that surprise win from Trump, remember the first thing he did was call all the CEOs, Tim Apple, called him to the White House to essentially
he did call him to the White House, but all of them, you remember they were going in to bend the knee into his transition period.
It was so awkward. That's what I mean. I think even before
but then he put that whole group together that came to the White House, and he was tapping Tim Apple's hand and just telling him how important he was.
So did you listen to the Joe Rogan podcast over the weekend?
I don't have 3 hours to run.
I saw the highlights. I did also not listen to the 3 hours, but Trump said that Sundar Pichai, Google CEO, called him to congratulate him on the McDonald's stint. And basically Sundar said, this was huge on Google. I've been texting a few people at Google this morning, have not been able to confirm that actually happened. But to your point, are they hedging a little bit? Are they saying, okay, we don't want to be caught flat-footed if Trump wins, so let's put in a good word. Let's do something that seems kind of harmless, like, good job, your McDonald's stint did really well. But there's also the regulatory piece of this, just to bring it back around, right? If you think that Trump is going to get rid of Lena Khan and Jonathan Cantor, who have been so brutal for big tech, then maybe they actually want him in the White House. Although it's not clear that Kamala Harris would not get rid of them too.
Yeah, I think she probably would. I mean, I think that the Democrats actually made a huge mistake over the last couple years. When I say the Democrats, I don't mean from really a political standpoint, but that Lena Khan has been going after every one of these big cap tech ones. And you just see a lot of these folks just sitting out this election cycle, which I think is really interesting. And, you bring up that point about that tech council that came to the White House, and, Trump was trying to kind of rally them behind him. Well, it didn't take long, if you remember, a lot of those companies, a lot of those CEOs, gave really sharp rebukes. Remember the Muslim ban and all that sort of stuff. And they rely on this sort of immigration for a lot of great talent, So I don't know how that changes a whole heck of a lot. The rhetoric has only gotten worse. You mentioned the Joe Rogan thing last night. This is Sunday night at Madison Square Garden. There was this huge, rally that Trump held there. Some of the stuff was extremely divisive. Now, I've seen the headlines from that. And so I just don't know how you square that circle if you're one of these big CEOs who really does rely for talent on immigrants.
I mean, it's one of the most confusing themes of this election cycle, because we haven't, at least since I've been there, I've only been there for, 2 presidential elections, but tech has never taken this big of a role. You've got J.D. Vance, Trump's running mate, who comes from a venture capital background. You've got Andreessen Horowitz,
they seem to be split at the seams here.
Well,
right?
they are, but I mean, why did they even get involved in the first place, right? They made it about little tech only to split, right? What you're talking about is Ben Horowitz came out and said that they support Trump. He said, my mom's going to be so mad at me. And then a few weeks later said, never mind, I'm friends with Kamala. So we're supporting her. The VC firm's stance itself hasn't changed, that they say it could if they hear from Harris's camp on what they want to do with little tech. But it is such a strange election season. You have Elon Musk, right, at that Madison Square Garden event yesterday. And it kind of gave permission to, a vocal, I think it's a small but vocal group of Silicon Valley power players to support Trump. So
that's a really good point that you say small. And, you and I both have a lot of friends in the tech VC community. And it's interesting, we were both at a conference in Dallas a couple weeks ago, and there was it was a small group, and it was kind of all pretty much off the record. And you and I got to talk to a lot of people, and it was interesting. I think that, it was Dallas. I think a lot of the folks, were clearly from the West Coast. And it's just odd to me that the West Coast tech folks are the ones that, at least anecdotally, seem to be very much behind Trump right now. But anytime you talk to a VC, someone that you know and like, and you start asking about this, and they say, this is a loud minority, among the tech community. I don't know. Do you get that same sense or no?
Not really, actually. Okay. I do feel like even day to day in San Francisco, I get people who they're so fed up, like you said, with the current administration's it's become so hostile towards tech that it's sort of like anyone else. And certainly there's people like Reid Hoffman, Aaron Levy, who come out and support Kamala. But I think your point is exactly right. You don't have that overarching support for the Democrats this time. It's more silence.
Right.
People aren't necessarily ready to admit in public that they support Trump a lot because of the social policies and the immigration policies, but it's definitely more divided this year.
But it's also interesting, when you mentioned Sundar, Satya. I mean, these people, Elon, they're all immigrants. You know what I mean? We could come up with a whole host, of other ones. And so I just think it's interesting. They've kind of closed their mouths, they've closed their checkbooks, and in the case of Bezos over the last week. I don't get it. And I made a mistake the other night on MSNBC, and the mistake that I made was getting on the wrong side of Kara Swisher's views on stuff, because I was asked about the Bezos thing, and I was kind of, I was thinking about it like in the kind of first level thinking. I was thinking about it from like my perspective, and it's like, well, you know what? I don't listen to editorial boards anyway, especially if you're thinking about the New York Times and the Washington Post. Their reporters are writing all this stuff that you would need to know outside of what the editorial boards were. And her point, and she was, hitting me up on text, and Stephanie Rule was the host of the show. She was hitting her up, and, it was just kind of funny. And their point is, listen, the precedent is not only horrible to break, the timing of the precedent. And then really, when you think of someone like Bezos and the sort of influence that he has on the world, to be kind of doing that for all the wrong reasons. And I get that. I didn't get it at the moment. And I'll tell you one reason why I didn't get it at the moment. I guess there was a huge uproar on Twitter about it all day long on Friday. I'm not on Twitter.
Right.
So I'm missing some of these battles.
There was the LA Times as well.
Earlier in the week.
Yes, that didn't endorse. But are we sure it comes? I mean, is it just assumed that it's coming from Bezos now? Because that's such a dangerous precedent. And from what I've heard, he has never stepped in to the newsroom.
Yeah, and I think that's, kind of the position that Kara was taking. And I'm sure she's well-sourced. She started her career there. She's in D.C. You know what I mean? Like I think she got her finger on the pulse of a lot of stuff. But again, when I say I made a mistake, I just got on the wrong side of her views. You don't want
to get on the wrong side.
No, and listen, I love her.
Or you do, actually. She's fun to debate.
She is fun to debate. And, so at the end of the day, it is what it is. But it is interesting to me then going back to 2016 and then what happened in 2018 when Zuckerberg was up on the Hill and Jack Dorsey was up on the Hill. These guys are all really quiet right now.
Okay, here's maybe the reason that we're not hearing from them is because what do they care most about? AI policy and regulation. And it's really, I think Sam Altman and OpenAI have emerged as such a power player. You see Sam Altman learn the lessons from Mark Zuckerberg, and he's going to Congress a lot earlier and having a very different relationship with lawmakers. They're like thanking him and saying, we love your product. Thank you for coming here. Thank you for looking at this. So behind the scenes, it's not... If you care about AI regulation, you don't want to support one candidate or the other. This is an extremely bipartisan issue. And what you really care about is just building enough infrastructure and countering China, essentially.
Yeah, I think that's a great point, though, is the whole idea that Sam Altman is asking for permission rather than forgiveness, which is the exact opposite that we saw, from the tech community after the last 15 years or so.
Well, to be clear, I don't know if I totally buy that. I think he's smart. He's getting his spin right.
Well, that's where I was going to go.
And making it look like he's asking for permission, but I don't think he is.
Yeah, no, correct. I agree. And I think he probably feels like, to your point, doesn't matter who's in the White House, right? Or who might take the House or, take the Senate or whatever. He wants to kind of figure this out collectively. And I think he does have the ability to help shape the policy. And I think that's actually an interesting point that you just make is like the crypto bros didn't do that. It was like this, you know what I mean? They just wanted to stay away from all the rails of any government, that sort of thing. And it hasn't been great if you think about for innovation over the last 6, 7, 8 years. Right.
Or maybe there wasn't a lot of innovation yet in crypto, one might argue. We'll stay away from that. But last point on OpenAI, look at who Sam Altman brought on board, Chris Lehane. I don't know if you're familiar with him. We're going to be doing our next Tech Check deep dive digital video on this whole policy question and OpenAI's role. Chris Lehane is someone who served as a political strategist in the Clinton White House, came west, worked at Airbnb first, and that was just massive regulatory battles on the local front. That business wouldn't work if it didn't have Chris Lehane getting regulators at that local level to embrace Airbnb and Airbnb to pay taxes. He's now kind of running that playbook at a federal level with OpenAI, and he's just a really powerful person in this space. He has been one of these key people to teach tech how to politic.
Yeah.
And that's why I think you see OpenAI doing it a little better.
Yeah, it's funny. On Fast Money a couple of weeks ago, we had Bradley Tusk of Tusk Ventures, and what you just described is kind of what Bradley was helping Uber out back in the day.
Less successfully, I would argue.
Well, yeah, and it's interesting in hindsight when you think about what a minefield that was, and this was not like, autonomous fleets using AI. This was really obviously a technology that put together the ability for people, like any people to get in a fleet and get paid to do it and everything like that. And that was a lot of local politics, right? Like, so, and it's still kind of messy, and it'll be interesting to see. And I remember this, was it 8 years ago, Travis Kalanick, the founder and CEO, he got in trouble. He was sitting up in some conference and he said, our real problem are the drivers. Wait until we move towards autonomous vehicles, right? Like that was one of the things I think.
And here we are, drivers. Yeah. And, well, okay, actually, and let me use this as a segue to bring it back to earnings. There's so much sort of anxieties and jitters around Alphabet, the greatest innovator's dilemma that maybe we've ever seen in tech, from the greatest business model. We were talking about this. I came to pod with you right after I was on Halftime Report, arguing a little with Josh Brown, who says that, Alphabet, it can only decline from now because people are going to be searching in very different ways. And their bread and butter, yes, is search. But where Alphabet, which gives me a little bit of hope, they've been so innovative, so ahead, is the Robotaxi front. And when you live in San Francisco, we've talked about this, Waymo is such a presence. People absolutely love it. And this is embedded AI, right? This is still a really important front of artificial intelligence. It doesn't touch everyone yet. But we also, like to say in San Francisco that if it weren't for generative AI, this would be the year of the robotaxis.
Well, right. I mean, that's actually a great point. And, Waymo is something that I think a lot of folks don't realize it's a division of Google. And when you think about those cars, I don't even think it says Google anywhere in there. And, one of the things that's really cool about the experience is that you have this big screen looking at you, you know what I mean? But basically begging you to do stuff on there. And, I think it's really cool. My only issue with that is so it's ring fenced. It's in San Francisco. They're really nice cars. Now, obviously, they could go down market. They're Jaguar SUVs, all that technology all over that car. It's like $200,000 for all that LiDAR. So it doesn't scale right now. And I actually think what Elon's doing, and this is one of the reasons why I think full self-driving had such a difficult kind of path to being full self-drive. It needs to be called supervised full self-driving, is that they are using all these cameras and generative AI to kind of map out what's around it. And I think that is going to be probably much more scalable, but it's going to be much later than we think. Does that make sense?
Absolutely. I agree with you. More scalable, but so unproven as of yet. And a lot of people in the industry sort of throw cold water, but that's nothing new for Elon Musk.
Yeah,
so he could prove everyone wrong.
Yeah, he can, but I think it's going to take the over in whatever period on their call that he just mentioned they're going to be out in a fleet format.
Yeah, I mean, you have to take that with a grain of salt, but Waymo just raised, I think, $5.6 billion last week. Talking to an executive who told me that they absolutely see themselves being profitable, and they are also making all of these improvements to get the costs of the cars down.
Yeah. It just amazed me last week, after Tesla's earnings call. I mean, the kind of, the predictions that he made about full self-driving and then 2 autonomous fleets, it's just the fact that people believe it. I mean, the stock went up, I think, close to 20%. It gained like $100 billion in market cap, and he's never hit any targets. And I just find it interesting because it also rallied on auto gross margins, the perception that they've bottomed. And so all these folks that just kind of chase this story, they say it's not an auto company, but it's trading off of auto gross margins and their ability to kind of get to a lower end car and then autonomous.
I think maybe because you only have to believe a sliver of it. I mean, look at the Cybertruck too. It's doing pretty well. And this was sort of something that no one thought would go anywhere. And you see them more and more in the wild. So maybe it's just a part of it. And there's always this idea that Elon Musk could surprise you. Yeah. And he's done it in so many different industries.
I think the Cybertruck is a gimmick. And again, it's doing better than people expected off a pretty low base. I think the quality concerns about it are probably very real. But if you look at their delivery numbers, I mean, they're high-end Model S and Model X, and now throw in, Cyber. They're literally single digits percentage of their sales. Right. So it's all about these lower end 3Y and whatever this 2 comes out. And I just don't see the trade war on EVs abating anytime soon. And when you think about it, Trump keeps saying that he's not in favor of EV credits and he's in favor of putting 100% tariffs on Chinese EVs. I don't know how that works for Elon.
Yeah, and how does Elon sell his cars in China if there's a massive trade war going on?
And not only that, half the cars that Tesla makes are out of Shanghai, and whatever doesn't get sold in China goes to Europe. Europeans are already imposing, tariffs on Chinese EVs, and like it or not, I mean, his are Chinese EVs. All right, I'm kind of hot on Meta right here. I want to get your take on this. So a couple weeks ago, I said this to Brad, I bought these new Meta AI Ray-Bans.
I've been talking about them all day.
Okay, they're awesome.
They're amazing.
Aren't they awesome?
Okay, I've been debating buying a pair.
Yeah.
Which ones did you get? Wayfarers?
I got the Wayfarers, and there's 3 different kinds. I got the Wayfarers, and they're like this matte blue that are very cool.
They look amazing.
The call clarity is better than AirPods, okay? The listening is amazing. You tap it, you do this. So you played with them.
Yes, and I see them like everywhere. This is very anecdotal. Everywhere I obviously hang out in a lot of tech first adopter circles in San Francisco, but I see them in the wild now more and more, and they look good. That's always the first thing that hits me. So I'm happy to hear that you actually really like playing with them too.
We bought them for our whole team here. Like everyone's going to be dorking. I know. Everyone's dorking out on them. Send me your home address. You've been such a great partner. We will get you a pair. And it's interesting because they're being sold at retail outlets. They're being sold online. They're really integrating Meta AI into the whole experience.
Well, they've become kind of AI glasses now, right?
Yeah.
And it's funny because we were just talking that Apple Intelligence released some of its features, which is kind of nothing.
We got to talk more about that.
Yeah. Well, or we don't because it wasn't that
today,
exciting.
Right? So you've had your iPhone 16. They did this over-the-air update, iOS 18.1. And I literally just did it this morning, Dee, and I'm trying to figure out what's on there. I don't get it,
Yeah, a Siri that glows but isn't any smarter. Yeah. Well, okay, but what's interesting is these Meta glasses do show you how useful it can be, and I'm just shocked that Meta's the one who's doing it.
Well, so they come in at like a $330 price point. They have transitions, so you could be outside. They're UV activated. You come inside, you're still on the phone or whatever, and they go down. They look like just normal glasses. I think it's really cool. I've talked to a couple of analysts on it. They're like, listen, this is going to be a rounding error on that revenue base, but it does give some confidence that the company is working towards whatever that Orion vision, so at Meta Connect or whatever, that's 2-3 years out. And so here are some incremental sort of things. You interviewed Evan Spiegel at this event a couple weeks ago. And, listen, when I said it was off the record, anyone could have said whatever they wanted that came out of there. But you asked him about their hardware strategy, and he was kind of downbeat. So they have these new spectacles. They are ugly as shit. Like, you've seen them, and you don't have to opine on them, but I don't see anybody wearing those.
No.
And to your point about the Wayfarers, this is a cool sort of, like eyeglass or whatever. He was very dismissive of the partnership. He just didn't think that was going to be particularly interesting going forward.
That could kind of like slow or complicate this process. So the partnership was with Luxottica that owns
Ray-Ban. They invested too, didn't they? Invest in the company, I think.
Did they?
Yeah, I think so.
I'm kind of with you on that. The spectacles from Snap, they're meant to be sort of AR glasses, whereas I think Meta is not trying to make their glasses too much and just kind of functional. And that's what I hear as well. The sound quality is fantastic. And even just using them, like I was thinking, I was at my son's soccer game and I'm trying to, get my phone out for the moment.
The camera quality is really good. So I was really surprised. It's interesting because I want to say it was like 2016 or probably 17 when they introduced their first spectacles. And I bought a pair. And, I'm like, I love checking this stuff out. I actually still have them. I have a great picture of me wearing those and then wearing the Wayfarers. They're really similar, from a hardware standpoint, but they don't do anything. All they had was a camera that could capture something. So it's interesting, like 6, 7, 8 years on, the tech hasn't changed that much from a hardware standpoint, except that integrating Meta AI connected to your phone. And this goes back to Orion. It goes back to a lot. The phone is the thing. If you don't have a phone, the stuff doesn't work.
Yeah, I think that's right. It has to integrate. One of the things about the Meta glasses is that You think you need it for the camera, but I've also heard as well just the sound quality. That's a really use case I hear, is that when people's AirPods are out of battery, they throw on the glasses. And I was telling David Faber this morning because he was curious about them.
Faber will never wear these things.
No, he
never,
won't.
Not in a million years.
Maybe.
Yeah.
He
looks like a Wayfarer sort of guy.
That's what I mean. He's going to wear these before he wears the spectacles from Snap.
Yeah.
But I was telling him that my brother, his like side hustle is a sauna boat, which he drives all over the Vancouver area. And he wears the glasses to listen while he takes people out because having the AirPods would be rude.
All right, that's the other thing that that actually I think is really important is like, when you have AirPods on with noise canceling, you really can't hear what's going around you. When you have these on, you can actually hear what's going on. One of the other things about Snap's strategy, and I just thought this was really interesting, is like what's left with this company. They call themselves a camera company. The results are coming out this week. I have 19, 21-year-old girls. They literally just use it for Snap Maps. You know what I mean? Like,
right.
I can't imagine that this is like any sort of, digital ad juggernaut. Like even with all the revenue that went away from Twitter, it seems to be going to Meta and, Alphabet properties and the like. I
mean, what they have is that sought after demographic.
Yeah.
And they've been hanging on to that for a long time. So I don't know. Yeah, I don't know.
Yeah, they better get some innovation. All right, let's hit a couple things on the Meta front. So again, we were just talking about the hardware, but this is one of the companies that obviously, is building this large language model. They're making a bet on open source. A lot of the smartest people, and I know you've talked about this, you've reported on it. A lot of people got really excited in 2023 about what these models might be able to do, both enterprise and consumer. Now it seems to be there's a consensus that all of these models are going to be commoditized. Right. So where do you go from here if investors are starting to be a little bit more specific about the spend on this? So, 40% of NVIDIA's revenue comes from Microsoft, Google, Amazon, and Meta. And so we're going to get a good read on how much these companies are spending. Right. And it's twofold, right? They're building out their own, data centers, right, to support others' usage. But then they're also spending a lot of money on these chips to, train the models and that sort of thing. So talk to me about what you're expecting to hear from a CapEx standpoint.
So I think CapEx is only going to increase. Look at the energy deals that we've had this year as well. This is clearly a long-term goal. They are going to do what it takes to get the infrastructure online to build more data centers. I was reading the Bank of America note over the weekend, and I was laughing because the analyst keeps calling them GPU resellers instead of hyperscalers.
I like
and
that.
It's true.
Yeah.
It doesn't really matter what they do with
they're the ones
models.
buying the chips for $40,000 or whatever.
And then
when I say
them out.
hundreds, if not thousands of them, and then renting out that compute.
Exactly. And there's going to be whatever model you're going to use, whether it's small or large, you're still going to need all of that data. You're going to need to run it through a cloud. So I think that they're just going to keep spending. I think that the CapEx numbers are going to go up. Meta is interesting, though, because in this note, when they called the hyperscalers the GPU resellers, it notes that Meta's the only one who's also buying a ton of these expensive GPUs, but they're spending on their own services. They're not subletting to others. So their CapEx isn't a signal for demand.
Right.
It's a signal for their demand for their own product and services. Right. And that's what Meta's done really well is actually, I've said to you that Google has AI for the mainstream, but Meta is increasingly looking like that.
No doubt. I like that call that you make as Google is AI for everyone. And it seems like if you think about all the platforms and the size of which that Meta has, whether it's, Insta, Reels, obviously WhatsApp is something like that's all of a sudden how they can start monetizing WhatsApp if you're starting to use Meta AI and that. So very interesting stuff, how they've been able to kind of move their focus from metaverse to generative AI, building a open source large language model that they want to put in all this different hardware. I mean, it makes sense to me.
I will say, though, that there's still quite a bit of skepticism over Llama and how open source it really is. It's not pure open source. And that's what some critics complain about.
Yeah. So one other thing I was going to say, as we move towards Apple a little bit, is like, okay, so Meta. Let's be clear. Expectations are really high. The stock is up nearly 65% on the year. Other than Nvidia and the Mag 7, it's massively outperforming everyone else. Google, Amazon, Apple, and Microsoft. Microsoft acts so badly.
Yeah.
So I think expectations are really high for that one. Valuation is fine. But like to me, 2 quarters ago, you remember they missed revenue by like $2 billion, and they like CapEx was $2 billion higher, and the stock got creamed.
Yes.
Now it came back obviously. So that's just the example of what happens when expectations are really high and you have a crowded long.
Right. But those were also the Apple ad changes,
right,
privacy changes that hit them so hard.
I guess that was like a lagging thing, but like 2 quarters ago, it really was the focus on, just kind of what the direction of the spend was and what the monetization was. And I think you made this point is like they're monetizing these investments, they've spent tens of billions of dollars on Reality Labs, but they're seeing it in their ad serving and the revenue that they're getting from that. And that's one of the earliest use cases, I guess I'd say.
Mm-hmm. I think that's right.
All right. So let's talk about Apple for a second, because that's going to be on Thursday. And, there was an article in the information. I found this really interesting. Let me just kind of get some quotes here. And, they don't often comment a whole heck of a lot on like the size of market caps and this.
Yeah.
And so the article was Apple's low-cost AI strategy wins over investors despite risks. Now, we've talked about this. Again, they did not spend gazillions of dollars on, on GPUs and build out these data centers and the like here. They're basically using the technology that OpenAI has created. Maybe it's going to be Gemini. And so investors are willing to pay a premium on that because they didn't actually have to do all that spend. Thoughts here, because I get it. Like Apple was like nowhere on Apple and generative AI. They launched this at WWDC and there's still nothing there.
But the story has changed, I think. And even if they're licensing OpenAI's ChatGPT to do this, they are the touch point for consumers. This is what actually Josh Brown pushed back on today when I said Google is how most people are going to interact with the AI. He said, no, Apple is. And that's right.
Yeah, it is right. I mean, but Google, think about all the apps that you use on your iPhone from Google. So like to me, there doesn't have to be one winner in a way. iPhone, 1.5 billion installed base, let's say in North America, they dominate smartphones, right? And if you think about the ARPU, average revenue per user for, let's just say, Meta products, they're so much higher than here in the US. You know what I mean? So I guess my point is like Google, they have 7 properties that you probably use, Gmail and Calendar and YouTube. And I mean, the list goes on and on. So they all can be on your device.
Right. Whereas Apple has one touch point and it is the iPhone. So you have to upgrade your iPhone if you believe the Apple AI story. You know what kind of went under the radar last week that I thought was interesting? Actually, it came a day after I was talking about how Apple's AI is kind of, that strategy is so screwed in China because Huawei keeps front running it and putting out AI features for its phones, kicked Apple out of the top 5 smartphone vendors. And then the next day, Apple was back in the top 5 smartphone vendors, which is so curious to me because Chinese consumers, according to at least one survey I saw, care a lot more about AI features than American users do, and you're not getting that,
especially because they use the super apps like from like WeChat and stuff like that.
Apple can't even release Apple Intelligence in China because they have to partner with a local AI.
Well, what
platform.
are they waiting for? Is like whether obviously Baba's got a big what I mean. AWS competitor, Baidu from a search standpoint. We know that they're both investing in a lot of this
and
stuff.
They've got their own models.
Yeah, so like the data out of China for iPhones was really interesting over the last couple of weeks. So we know that revenue from China is about 20% for Apple, and I think there are suggestions that it's gone from like low single digits year over year growth to maybe as high as 20%. That would be great for Apple, but the only thing I don't understand is like there's no service that's causing you to upgrade it, right?
Yeah,
and
exactly.
You think about how poor.
That's why it's so curious.
Yeah, if you think about how poor their economy's doing, like they have youth unemployment at like 20% or something. Like who's buying these iPhones for no reason? You
know what? Maybe it tells me though is that this has been like a government campaign to say that everyone loves Huawei phones and they're buying them, and maybe that's not actually the case. And we can't really play around with the system because it's in Chinese. But maybe it's just not all it's cracked up to be, and it was nationalistic to begin with, but maybe people still love their iPhones.
Yeah. Yeah. Before we get out of here, I'd love to ask you about Microsoft. They report, I think, on Wednesday after the close, and they just said, this stock is up 15 or so %. It's really kind of stuck in the mud, not too different than Google, and underperforming the S&P and the NASDAQ. That's not something I would have expected, right? When you have a rip-roaring bull market, S&P at all-time highs, and Microsoft underperforming. It's the third largest market cap behind Apple and NVIDIA. What do you think is going on there? Too much reliance on OpenAI. They're a huge reseller. You and I have talked about this as just a lot of their clients aren't using a lot of these co-pilots and the like.
A few things. I think Copilot has underwhelmed. But the arc that it's had in sort of its AI narrative has been so fascinating, right? It was first to the punch, and Nadella could say things like, I want to make Google dance, which was just so like arrogant and great at the same time. And they had this partnership and huge investment in OpenAI, which was a real benefit. But now it's sort of become this albatross, right? They, through their agreement with OpenAI, they have to give OpenAI credits. And there was this analysis, I can't remember, from an analyst.
Compute credits on Azure.
Compute credits on Azure, thank you. Where they could be charging a lot higher, but they're not. So they're actually realized revenue gain from Azure in AI is a lot lower because of OpenAI, but those are about to expire. So that's maybe an interesting opportunity that once they no longer have to give OpenAI all of these credits and they can sell them at market value, do we see sort of a shot in the arm for Azure?
Yeah, and I guess I wonder if that was more like a market share play, right? So if they had, and it wasn't exclusive, but access to OpenAI, right, that's running on Azure, the whole idea is that you would basically get, more clients, existing clients or potential clients away from AWS or Google Cloud that want to use that now, even if it's coming at a discount for that first year and a half or whatever it is. Once you get on a cloud like that, you're not likely to kind of shift a lot of those like that activity is my guess, or no?
If you go to an Azure for your AI, I don't know. It's a good question.
Maybe that's something for Tech Check. You know what I mean? But I think your point's a great one. I mean, if they were kind of underselling it and based on an investment of $13 billion, which is really a rounding error for Microsoft when you think about like what their CapEx is and everything like that. So
and they're giving up potentially billions in revenue. So I did like a back of the envelope math, like how much would their stake in OpenAI be if OpenAI last raised at $150 billion plus valuation, something like $70 billion for Microsoft?
Okay.
Unrealized, of course. And, we can debate this another time, whether or not OpenAI justifies that valuation or not. But it's a good debate. And to have in tech. The other thing, just which we mentioned for the others, is this giant CapEx cycle that also sort of hangs over Microsoft and its valuation. It's among the highest of the Mag 7. And if you're not seeing the follow through on that, it's not a reason for
and
you trim a little.
What is a cut in CapEx? What does it actually say about the investments that they've made to date? I mean, again, I don't have an answer, but I think that's something that might be kind of hashed out in the next week or two.
And that's sort of what the problem is that if you're a hyperscaler and you are basically a GPU reseller, then you're tied, your demand is tied to how many GPUs you're buying. It's like a prisoner's dilemma.
Right, no doubt.
If you're buying less and you're spending less on CapEx, then investors think, okay, maybe demand isn't as much either.
Right. Well, one of the things that I think would be interesting, we've heard from Jensen Huang from NVIDIA, he's saying that, okay, they had this little snafu, a bug when they were in Blackwell. And then, a couple weeks later, he said that demand is insane. You remember that? And so it'll be interesting to see what any of these companies have to say. That's obviously Microsoft, Google, Amazon, and what they have to say in Meta about, Blackwell, if they really guide to that. Because again, if you've just been spending tens of billions of dollars on NVIDIA, on Hopper for the last 2 years, the idea of just now upgrading tens of billions of dollars for performance, especially when a lot of these big models have already been trained on everything on the internet. I don't know. I find it interesting.
It's hard to say. Yeah, this debate comes around for NVIDIA every quarter and they just keep blowing it out of the park. And they've also, I remember several quarters ago talking about the inference piece of it and maybe that was, potential vulnerability. Jensen Huang is just too smart for that. And he finds the proposition in the inference space and builds the ecosystem around it. So he's just been firing on all cylinders.
I just think it's really interesting, though. Like the stock had made an all-time high in June, and then it sold off 35% to its lows in early August. That's obviously early August. That August 5th was when the market crescendoed into that low. And then since August 5th, the lows, the stock made a new all-time high. It's up 57%. Just think of that on a $3.5 trillion market cap. So this stock has been very volatile. So this week could be really interesting to see how NVIDIA reacts to some of its biggest customers and what they have to say on the CapEx front.
Yeah, absolutely. I think also, though, you'll like this, Dan. I think NVIDIA is still, at least on a price to earnings multiple, the cheapest of the Mag 7.
Yeah, and it's clearly one of them, and you have to, like, I guess you're coming off very difficult comps going forward. So you're going to see those growth rates come down really hard for, fiscal 2026, which is next calendar year. It's trading at 35 times, and you're expected to see, earnings growth of 40+%, revenue growth, same thing. So you could say, okay, 35 times, 19 times sales, it looks kind of cheap. I just worry about the quarter, man, where they guide down for the first time in 2 years, and just kind of, it's a crowded long, sentiment's really hot. Jensen, every time he has the opportunity to say something, big, he does. You know what I mean? So I think the thing is always priced to perfection, even though it's trading.
Yeah, he doesn't subscribe to the under-promise and over-deliver.
Yeah.
He
You'll love this.
Over-promises and over-delivers.
100%. Last week, so we're on the set of Fast Money, and it's a break, and then all of a sudden, and you know how the thing is set up there. Lisa Su, CEO of AMD, is walking by with a whole crew, and we're all like, Lisa, come on the show. Like, you know what I mean? We're on a break, and she's like,
was she outside the NASDAQ?
No, she was, like where the set is right below it.
She was doing something there.
Yeah, she was walking through there, and she's like, no, another time.
Jensen did it on Squawk Box.
Oh, he did it just like that?
Yeah,
oh,
he walked by, and they didn't have a microphone for him or anything, and then he came on and called Squawk Box the greatest show on TV.
Get
so
people
Lisa,
love this guy, man. Like, he's keeping everybody happy, the TV folks, the customers.
Have you ever seen him moderate a panel? No. He is so funny and so good at it. Once I had to moderate a panel with him, and he almost took over.
Oh, really?
For me. He's just so good at it.
You couldn't get a word in that.
No, not in that sense. He was just very funny, actually.
Yeah.
He's very funny.
Listen, I know folks who've known him for 30 years, bankers and this stuff, and this is who this guy has always been, and so, he's at the forefront of every major cycle the last 20 years. He's talking it up right until it crests over. Like that's just the fact. And then in 2022, he didn't stop talking everything up, and it came back. And then all of a sudden, you're like, holy shit, this is one of the most important companies in the world, and that's not something anyone was willing to say 10 years ago. Let's be honest.
Right. That's very true.
All right, Dee, we covered a lot of ground here. I really appreciate you being here in studio.
It's a pleasure.
And you know that you have a seat here whenever you want.
I basically just messaged you this morning, said I'm coming.
Well, I said I'll make whatever time you need. All right, stick around, everyone. I had a great conversation with Brad Erickson from RBC Capital Markets, and we did a preview of all these companies we just talked about into their earnings this week. All right, welcome back to OK Computer. I'm Dan Nathan. I'm joined by Brad Erickson. He is the internet analyst at RBC Capital Markets, and he covers a whole host of names that we are going to talk about that are reporting this week. Brad, welcome to the pod.
Thanks for having me. Good to see you.
Yeah, great to see you. You and I met in person, I want to say in May out in LA. You guys were hosting your private tech conference. We spent some time on how a lot of those companies are kind of going after some of the names in your coverage. And you and I thought, well, this would be a great way to kind of preview an earnings season, get back in touch here. We've had a lot of your colleagues, Halima Croft and Lori Calvasina, on, and we're going to start to drill down a bit more on some of the sector analysts in the equity research space. So I appreciate you coming on.
Yeah, sounds good. Yeah, big week with the mega cap earnings. So
yeah, and it's interesting. We always talk about what groups get earnings season kicked off. It was banks for the most part. I think about a third of the S&P 500 companies have already reported. There's some trends going on there. The banks were better than expected, but some of the groups away from that, and especially in tech, we've seen revisions not exactly going up in the near term, and so that's one of the reasons why I think a lot of names in your coverage, this Mag 7, might be very instructive. And so, other than some of the kind of numbers that we're focused on, some of the metrics, it'd be really interesting for you to give us a gauge of what investor sentiment is in these names, because I know that you talk to a lot of influential long onlys, but also the hedge fund crew in the long short. Let's get going with Google. They report Tuesday after the close, and I always find it interesting to kind of see what the options market is pricing, about a 5.5% move in either direction on Wednesday. Then after the average move has been about 8% over the last 4 quarters. 3 of those have been down. And so I'd love to get your sense. You have essentially a buy rating on this stock. It's been one of the more controversial names in the Mag 7, I think, to say the least. And, probably trading nearly 15% off of its highs from earlier this year, kind of stuck in the mud here heading into the print. So this one, about what they report, some of the trends that they're seeing as it relates to search and across some of these platforms, and what their guidance looks like is going to be, to me, very instructive here. So thoughts on the name in general, and maybe kind of give us a sense of how you think the buy side's looking at the name also.
Yeah, for sure. So maybe start with positioning and everything. So it's definitely an underweight name for a lot of the long onlys right now. On the hedge fund side of the house, it's interesting. I think while many are negative related to the overhang with their court cases with the DOJ, I actually haven't found a lot of guys short the stock like overtly lately. They're more just sort of not involved, but definitely underweight on the long only side at the moment. And so there's kind of like 3 things basically that we tend to focus on. 1 is the search business. 2 is YouTube has actually come into focus more lately, just on the downside. And then 3, kind of GCP and into the whole AI, the Google Cloud, and into the AI discussion. On search, we do a lot of deep channel checks on this. Demand has generally been fine, not amazing, but fine. And the marginal sort of consumer has gotten a little bit better, actually, or call it less bad than last quarter. So I think there was a positive development on the margin there. On YouTube, the struggles may continue. I think the concern is that Prime Video is dumping a lot of new inventory on the market that's hurting YouTube pricing. And so we'll get more clarity there. And then on the AI front, obviously, they're launching a lot of new tools. No announcement yet related to Apple and Apple Intelligence, but I think maybe some bulls are sort of holding out hope for that. Okay, so that's all the fundamental side of things. I think you sum it all up. If it's kind of a better than feared quarter, what we've kind of said is the stock's probably stuck range bound. You kind of said it a minute ago. Because you got these huge overhangs on it, which we're going to get more color in November and December on how Google might be expected to remedy the default search case that they recently lost.
Well, let's break down these issues one by one. So the search, I thought was interesting that you saw like incrementally, or at least quarter over quarter, it's gotten a little bit better. And, I wonder if like earlier this year, as a lot of consumers were trying out ChatGPT or Perplexity or Claude, if that was one of the areas that kind of put some pressure on that, a little bit of a headwind. And at the end of the day, people got very used to Google being free, right? For all intents and purposes. So the idea of paying $20 a month for the pro versions of those is not something that we would expect a lot of consumers to kind of do. So talk to me a little bit about that search dominance and going forward, because these models are getting better and better. I think as more consumers recognize how they can work across many of the different productivity tools, not just for search, that's going to put a lot of pressure on Google across their, multiple platforms that have over 1 billion, in some cases 2 billion users. So talk to me about what you're expecting as far as search, because this last year has probably been a bit noisy.
Yeah, for sure. I mean, just in general, the last few years have been incredibly strong growth for search. So we're expecting it. We're dropping into kind of the low double digits. We're in sort of the 11, 12, 13% year over year range, just to quantify it. But no, to your point, I mean, this conversation has been happening for 18 months now, which is like, hey, who's going to have the best model? Which tool, whether it's ChatGPT, Claude, Perplexity, or the half a dozen others, are going to drive the most utility? In the near term, we're not seeing a lot of a change in Google traffic, but really when you think about it, and I think this goes to a lot of like what Mark Zuckerberg has talked about, and you'll hear AWS talk about it as well. In an open source world, which is where we think all of this is headed, these models become a complete and total commodity, right? I think I saw the CEO of Palantir on CNBC the other day, basically speaking to this point. And so if they are all a commodity, product's going to effectively be kind of staying. And so what differentiates it? Distribution. And so that's where I go back to the DOJ case, right? Google's going to have to figure out how they're going to sort of make it a more level playing field on how they get distributed onto the iPhone and potentially other handset makers. And so that's where we think this is really going to get decided, as opposed to just like, people using ChatGPT on a subscription basis, which to your point is pretty small numbers.
Yeah, and so that was one of the things I think, back in June when they had WWDC, this is Apple, and they kind of introduced Apple Intelligence. Now, granted, I just did an update. It's October 28th on my iPhone 16, and some of those, Apple Intelligence features are being rolled out. But at the time, a lot of folks were like, okay, it looks like they're getting OpenAI technology for free for all intents and purposes. They didn't have to spend tens of billions of dollars on building out, these and training these large language models, and they're basically getting it for free. They did mention something right afterwards that they're looking to possibly do a deal with, Alphabet or Google's Gemini. And so you just mentioned that hasn't happened yet. So to me, I think that, Apple Intelligence is probably the best way to get adoption of these sorts of models. If you think about it with consumers and 1.5 billion plus, installed base. But at the end of the day, if you have a commoditized product, this is what Google looks like, on many people's, devices, whether it's smartphones, PCs, tablets, or whatever it is, I don't know. How do you monetize that? For a company like Apple, it's just one more reason to possibly upgrade your iPhone more frequently. And then when you think about this, and I'm just curious because you mentioned the DOJ, they're really coming at this monopoly as it relates to search. They pay Apple $20 billion a year or so to get Prime or, to get search dominance on Safari on iPhone. So how does that shake out? Is this something that keeps you kind of on the sidelines a little bit? I know you have a buy rating, but you definitely sound a little cautious here.
Yeah, I think, at the end of the day, just speak to the rating and everything. And I think, could the stock go lower before it's higher? Yeah, I think we may get a point to be more aggressive as buyers. The power of the moat here is really the ecosystem. You mentioned it, a billion I think a billion plus users on a daily basis, close to 2 billion total. That's probably not going to change. I don't know how hard I'm going to have to try to find the default, whatever search engine on my next iPhone, so to speak. But again, and I'm sorry to keep bringing in the DOJ case, but it really is just like incredibly strategic and foundational to this debate, which is that if Apple cannot monetize, they'll probably monetize something, but not 20 billion, to your point. If they can't monetize that, right, and they can't give Google that preference, are you going to open that up to a tool like ChatGPT, which 90% of your users, 95% of your users have not really ever used, and they don't have a business model necessarily that can support that kind of economics. And so the view is, bring in, I don't cover Microsoft, just to be clear, but the other thing is that Satya has basically shown that he's willing and ready to write a check for that default access. Apple is not a named party in this DOJ. They can go out and do whatever they want, right? So it creates a very interesting sort of interplay there between the big players, depending on how much Google has to kind of handcuff itself from being distributed. One other little nugget I'll share too, because it gets missed in all this. When, back at WWDC, you referenced it a minute ago, when they announced the ChatGPT integration was coming, the Apple folks who talked about that immediately went to a private panel and said, hey, we're probably going to roll out other providers, just to be clear. And he even said it on stage. He said Google would be an example of that. They found that Apple Intelligence was trained on Google TPUs. So we know they're already in the water stream for Apple Intelligence. They just haven't come out and talked about it yet. But again, there's just a lot of interplay that will depend on this.
Which is probably has something to do with the DOJ, right? So they would really be doubling down on that relationship that wouldn't be particularly helpful to them right there. One of my answers to this whole, kind of all these big players and scurrying around and, trying to get, obviously it started with Microsoft and OpenAI. If I'm Apple, I'm just buying Perplexity because you can use Llama on there, you can use OpenAI on there, you can use Claude, and there's going to be other models that come in, and they're just going to, like you said, they're all going to be commoditized and then not really mess around. I would have made that as part of Apple Intelligence and integrate it with Siri. But again, I don't work for Apple. I'm not in their corp dev. Let's just get to valuation really quickly here. So right now, the stock trades about 19 times expected 2025 EPS growth. growth of about 14%. Again, that's expected. Sales growth about 17%. You're looking at it about 16 times the out year, so 2026. Very cheap, and we know, I guess, the reasons for that. How are you thinking about it in regards to gross margins? Because again, like I said earlier, 69%, that's really been a static sort of level for them. And it's kind of, stepping down to about 62%. And that's expectations in 2025. Thoughts on why that's happening? Does it have a lot to do with the spend on GCP and in and around the development of Bard/Gemini? How are you thinking about that? Because that has to do a great deal with this kind of, this multiple that is much cheaper than many of its peers.
Yeah. Certainly, there's a few things going on. One is kind of near term, the other's bigger picture. On the near term, right? It's anytime they're coming out with like a cycle on any one of their Pixel phones, right? That's going to hit their gross margins significantly. So I think that's kind of what they've pointed to as far as like the Q3 aspect being down. Bigger picture, we know these guys are spending tons of money. Google, I think, is going to spend probably close to like $50 billion next year. And on CapEx, and a lot of that is around, artificial intelligence infrastructure. And so you layer on incremental depreciation, that's a pretty big point of deleverage. So those are kind of the two factors there. Now, Ruth has been, Google CFO, has been very, very clear. We know the phrasing now, durably re-engineering the cost base. That's what they're going to do. There's a ton of operating expense in this model. We think they can still offset that gross margin deleverage. So that's not something I really worry about. On the valuation point, I would actually say too, it's cheaper than you're right on the street multiples you just mentioned. Buy side is above the street here, so you knock a turn or two off that multiple, and that's where you're starting to look at like a 15 times on 26 numbers. I mean, Google bottomed out 10 years ago when you were transitioning from desktop to mobile at like 13 times. So we're looking really attractive here.
Okay, let's move over to Meta here. And this is another one, again, putting my kind of, banker, corp dev, whatever kind of hat on. I mean, to me, when everything that we just talked about as it relates to Apple and how they're positioning, these sorts of models on Apple Intelligence on device, right? That's a big part of their kind of upgrade cycle narrative. It's got to be something that is not just a downloadable sort of thing, right, for a third-party app. I think of Meta and I think of open source, and I think that's what obviously Llama is being built on. The Information has a story out today that, Meta is also going to build a browser. And so they're really trying to, kind of get around a lot of the facts that they don't have hardware, right? And it's not embedded into, their own device. So they are really subject to, being on obviously iOS or Android devices. Here in the US, it's largely iOS. And I would think that why didn't they do the deal with, Llama and Meta rather than, let's say OpenAI, because they really could have kind of made a better partnership, a richer partnership with a hardware provider that actually, most of their customers in North America access their apps on, you know what I mean? And so as they're trying to roll out Meta AI, that could have been something kind of interesting to me, especially when a lot of these companies are thinking about getting distribution of these models to consumers. You just mentioned it before, 90% of US consumers have never really engaged with these things, and I couldn't think of a better way to do it through hardware. So talk to me about Meta, because this is one of the Mag 7 that has massively outperformed the S&P, up 63% of the year. Aside from NVIDIA, all the other 5 names are basically up in line with the S&P or underperforming it. So what has Meta been doing so correctly this year, and why have investors appreciated that more so, let's say, than some of its mega cap peers?
Yeah. So I think there's, I don't know, if we broke it down to kind of like 2 things, basically. One is that they have a core business that is both coming off of easier comps, and they have a product cycle going on, which is it's called Advantage Plus. It's kind of one of their main AI tools that helps advertisers measure campaigns, and as they see that more and more, they spend more. That's part of it. And then the second thing is, and this is more of like a recent sort of like a 3, 4, 5 month phenomenon where you've seen the multiple expand, is I think investors, for the last several years, every single print, it's like, oh my gosh, can you see how much money they just lost on metaverse, right? 8, 10, $12 billion,
I think cumulatively Reality Labs has lost $60 billion.
Wow, I didn't even realize that. That's amazing. Yeah, big numbers. And so all of the while, think back from like a year or two ago, Mark was talking about putting things on our faces that everyone's looking at it like, no way, man, this is not going to happen, right? Well, here, what's changed? He announced these glasses at the Connects conference, Orion. And then, I mean, my joke is like, well, people think that this could actually be a real product, right? And when Jensen is in the video and endorses it, it must be real, right? And so all of a sudden you're like, they're losing $6 a share on Metaverse right now. And so I think what investors are contemplating into this print is like, they're going to listen to Mark really closely. They're going to listen to that productization commentary for Metaverse and say, maybe we shouldn't hold $6 back. And so just to tell you how the numbers flare out, it's $27 is the expectation in earnings per share next year. So literally slap $6 on that, 33, and then go to like 40 instead of 33, 34 in the out year. And suddenly you're like looking at a $585 stock on $40 of earnings. Like, come on, that's like a third of what the multiple that Costco trades at, right?
Yeah. Hey, really quickly on the wearables, it's, I think a lot of folks have gone back and forth and said, why did they showcase this product that is not going to be, available for 2.5, 3 years or something like that? And, I think a lot of it had to do with what you just talked about. It's like they've spent tens of billions of dollars within this metaverse / Reality Labs, area, and they needed to kind of get their own people fired up. They needed to kind of get investors and consumers to see their vision for a lot of this stuff. And, I'll tell you this, a few weeks ago, I had dinner with a handful of the Meta AI guys, and, they were talking about these Ray-Bans, and, I just had not focused on them. I just thought that this was like a gimmick, that sort of thing. And I went out and bought a pair. And they're awesome, man. Like they're really like, I'm going back and forth saying, you know what? I'm leaving the house, a behavior that I've done for 5 years, always having my AirPods on, and I'm bringing the glasses now. And then I just said to myself, you know what? I want the transitions, the ones that go, from sunglasses indoors. I think it's a great product. Now, if you think of their revenue base, I mean, it's going to be a rounding error, right? But it probably kind of, because it's a partnership and the like, but it's that was more instructive to me about what their wearable strategy and how they're going to integrate, Meta AI into hardware than the dream of Orion, in 2 to 3 years or so. So I'm curious, and again, this is not going to, it's going to be a rounding error on the revenue number, but I'm just curious, do these Meta AI, Ray-Bans, do they give you more confidence in what they might be able to do from a hardware standpoint?
I think it's a start, but, again, like when, the way that Mark equated it to how we sit at our computers today, we still have our phones there and we use them, right? I thought that was a pretty good analog that was maybe able to explain it. But obviously it's different in that, like, before we had the smartphones, we had flip phones, and it was a relatively similar use case that just expanded on that. Are people gonna use this stuff? I mean, just looking back in the annals of like consumer tech history, right? I think Apple is one of the highest selling. Apple iPod was one of the highest selling devices, like at sort of like $300-400 or less, where it didn't obviously set aside the smartphone. Think PNDs, GPS devices, Garmin, TomTom, stuff like that. Those were like 30-40 million a year. So at that price point, you've never gone beyond sort of like 50 million units a year, which is a rounding in. But I don't know. I mean, like, I guess I'd put the question back on you, is like, when you saw that device come out and you saw the video with like Jensen endorsing it and everybody saying this is a game changer, like, I don't know, do you believe it?
No, I thought it was stupid. I mean, like, think about this. Like, in most of the FTC and DOJ stuff, for example, they always seem like 2-3 years out, and you say to yourself, well, how can I trade a stock, or how can I invest or not invest in a stock because of this? So all of a sudden, if you're able to tell me that there's going to be proposed remedies in November, well, that's a little different, right? You know what I mean? Or something in early 2025. So I think a lot of the excitement about Orion seemed way premature. And also, Apple with Vision Pro, they're going to go down market with that. If they've already seen what Meta has staked out for hardware and they're looking at the competitive landscape, I mean, I think in many ways, by the time Orion gets here, it's not going to look a whole heck of a lot like it did when they presented it a couple weeks ago. So to me, it seemed kind of gimmicky. I'm more focused on what they're able to do right now and integrate the tech and how it might learn with Meta AI as that becomes something of a, you know what I mean? So that's kind of my 2 cents. And then the multiple point that you make is a good one, but the bigger point that you just made is how the company is using this technology and the investment that they've made over the last 4 years or so for their ad serving and for their clients, you know what I mean, to basically recognize how this is a superior platform. And I think that's one of the reasons why the stock has performed so well and then also had this multiple expansion. So how into the print, how do you think the buy side is positioned in this name?
Everybody's long and everybody's kind of bracing in case they don't hit the bogey, which is, for what it's worth, 20% growth at the high end. They have to hit that number or higher, or the stock is going lower. I don't care what else happens, which is crazy to say, but you've got really, really lopsided positioning. I would call it almost like a knife fight to get things moving.
Yeah. And again, to your point that the street is looking for like 18% revenue growth, and you're telling me that the whispers, 20 or maybe a little bit higher. I just remember 2 quarters ago, they had, I think their revenue number, they like kind of missed by like a couple billion on like a kind of 40 billion number, and then their capex was 2 billion higher, you know what I mean? Like, and then people freaked out, so again, I think that speaks to kind of positioning too and where the whispers are. So that'll be an interesting one to track. Here's another one. Amazon reports on Thursday, and this one has also outperformed the Mag 7. It's up 25% on the year. We know that it's not just such a clean story as it relates to AWS and kind of what they're doing as far as generative AI. They've invested in Anthropic. They're building a lot of their own stuff. They're trying to build out their infrastructure, to compete with Google Cloud and Azure and everything that's going on those platforms. But what are you most focused on here? I think some of the disappointment in that last quarter has obviously gone away a little bit as the story is kind of broadened out. You just mentioned that advertising business that they have, and they're moving into, like live sports and, a whole host of other things. And so it's become a more difficult story, don't you think? I know you've covered this name for a very long time. Some of the drivers have changed. And then again, in the last year, we've seen improvement, on the margin front in some of their e-commerce stuff. And, you mentioned Costco before, and just really quickly, about a month ago, Walmart reported, and Walmart's e-commerce business, and I'm sure you track this, saw, acceleration, I think, to 21%. They're speaking about how generative AI is helping on a whole host of issues, how they're targeting customers, logistics, product, a whole host of things. So how are you thinking about Amazon? What do you think the most important things that investors are focused on?
Yep. Yeah, there's like 2 core things, and then one that's like a total science project that actually does matter, which is the satellites, but we'll get there in a second. Number one, it's AWS. Everyone always cares what that growth rate is. And honestly, there's a lot of third-party data that kind of tracks that, and the data is tracking really good. So if you continue to get that rebound back into kind of the low 20% growth, that's a lot better than people were even thinking 6, 9, 12 months ago. That's a great, like, check the box. I've always said that the majority of investors who own Amazon probably own it for AWS more than the retail business. The second piece is the EBIT expansion thesis, right? The margin expansion thesis. And there it's really coming from the retail business. You mentioned it. I think there's some analysts in my peer set who have put out some fairly negative stuff through the quarter, downgraded the stock in some cases on fears that margin thesis was going to kind of run out of runway. I think partially on the competitive front from Walmart. We talked to these guys. We talked to the 3P sellers, these companies that aggregate 3P sellers, so they own like many brands. This phenomenon of sort of like squeezing take rate, that's been happening for 1.5 years. So I feel like that's pretty well like embedded in the model and known. I called Amazon the cleanest setup of the mega caps that I cover into the print because you've lowered the bar there. And then here's the kicker on the science project. It's called Kuiper. They're going to start shooting up a bunch of rockets, I think in Q4 or Q1. basically they did not, they're spending a lot of money on this, like hundreds of millions of dollars turning into billions. They did not break it out, and they missed on the EBIT margin in Q2, and everybody was pretty like upset about that. I do believe that management probably regrets that and will likely change the disclosure. So again, that's positive on the margin too. So
yeah. So again, as far as the setup here, buy side, I mean, this is one where, aside from what you just mentioned about AWS, which bottomed out a couple quarters, what was it, low teens, and now you're expecting it to kind of reaccelerate to above a 20%. I mean, this is a name that for a long time people had lots of issues as it relates to valuation. But when you think about, the margin, setup as it relates to AWS and the reacceleration, and then maybe some of the benefits that they're going to get on top of the models that are, in AWS and the customer take on that. The ad business, which is what is a $30 billion business right now. So the mix shift
moving in on 50 now.
Okay. So the mix shift for this company has changed very dramatically. So you're seeing, this sort of margin improvement. What do you think the setup is for, for the buy side here in the print?
Yeah. So and again, like kind of consistent with what I just mentioned, I think you're set up for a potential clearing event on a couple of fronts. I do think numbers are going to have to come down. We do agree that they're probably going to guide below the street. But you do that and you give people a sense of how to model this Kuiper expense into next year. So just for context, like they might do $75, $80 billion of EBIT next year. Kuiper might cost them as much as $5 billion against that. So it's a really big number and nobody has any clue how to model it. You can kind of drive a truck between the expectations right now. 1 to 5 billion is what people think, which means we don't really know. So I think if you can clear out, right, that confusion and you bring numbers down, that's where I think the setup is quite clean. People are positioned long on this one. But like I said, we've embedded a lot of fear, and I'm sure you guys have been talking about it weekly, I imagine, in your stuff.
Yeah, and my take is this: is that the Nasdaq and the S&P, have the S&P is basically at all-time highs. The Nasdaq has gotten back up there, and I think what's interesting about Amazon that we talked about, Google, they're still like well off their highs from the summer. So when you tell me that there's a lot of like bullish positioning in these, I say to myself, it's not going to take much for a guide, even a mild guide lower, to have those stocks heading lower. You know what I mean? Because the market to me seems to be broadening out. And then you think about, I know we're not going to get into Microsoft. I mean, Microsoft trades horribly relative to the Nasdaq right now. It's only up 14% of the year. Apple, where there's so much expectations, there was this massive reset, after WWDC, basically trades in line with the S&P, up about 21% or so on the year. So I think investors are looking to broaden out the stories too, as it relates to, there's been 20 names that have captured most of the excitement in the public markets about generative AI, and it just seems to get long in the tooth, right? So all right, the last one.
Can I ask you a question on that, actually? This is something that's been coming up a lot lately, right? I covered 24 stocks across the internet, but naturally I'd spend a disproportionate amount of time talking about like 6 of those. And you just said it, all of the alpha coming from a very few number of companies. I'm hearing this incredible thirst from investors lately looking for sort of like mid-cap ideas. But here's my question. In a world where we know this AI investment cycle and the business, the value that accrues to a few companies, can we get out of this range of just a few companies driving all the alpha? Or are we in this thing for the next several years?
Well, here's a good example, and I think that's a great question. You mentioned Palantir before. Palantir opened the year, I want to say, in the high teens. It had this breakout quarter in early February. The stock was range bound between 20 and 25, and then all of a sudden it just took off. Well, here it is. It's trading at $45, okay? And this is really, and it's a $100 billion market cap company right now. It's trading at all-time highs, and it's trading like they're expected to do like tops, like, $3 billion, I think, at some point, in sales. Here, let me just pull it up for a second. So you can do that multiple sales. Yeah. So this year is supposed to be 2.8 billion. Next year, 3.3. We know how this ends. You know what I mean? This is not a company that's going to go straight to $200 billion on that revenue base that even if it were to accelerate, we're talking about 20 4% revenue growth this year, 21% next. That is not hyper growth. You know what I mean? So again, that's the broadening out, people looking for different ideas. I mean, to me, I just don't see how this stock can work from here. I don't know how any of these kind of grow into their valuation. So that's my, my 2 cents on some of these stories. And I worry about some of the underperformance. I worry about NVIDIA now all of a sudden coming off really hard comps, right? And that is a crowded story. And I'm not asking you to opine on that. I know it's not in your coverage. So to me, even after all the excitement around Tesla and what they're talking about with full self-driving, which is going to rely a great deal on generative AI, right? If you think about it, it's a very different approach to LiDAR that a lot of their competitors like Waymo are taking. So I don't know, man. I'm kind of skeptical here. I could see a total retracement on a bunch of these names as we don't see the use cases anytime soon. And Tesla's a great example of that. And you wrote about this last week, okay? So after the Robotaxi, or 2 weeks ago, after the Robotaxi event, Uber just broke out to new all-time highs, okay? Because nobody who was in Uber for autonomous fleets thought that Robotaxi's coming anytime soon, or at least in Uber because they think that, their fleet structure or whatever their model is going to have any pressure anytime soon from. And in Uber partnered with Waymo, right? And they're starting to do some trials. I've been in Waymos. It's awesome. That's a great experience. Now, the question is, does it scale? Those Waymos are now, with all the LiDAR and the equipment, cost what, $200, whatever that, $200,000 or something like that. So the question does it scale? So what is your focus as it relates to Uber near term? Obviously, they've been improving a lot of the rideshare metrics. They're owning the market here in the US, but how much of it is these bonus, extra sort of things?
Starting with the fundamentals, I think they've been pretty clear with the street. The business is enormous in terms of like the millions of rides they're doing every day. They have a ton of visibility. They're going to land pretty close to the pin. Probably a little bit of upside relative to the estimates over the next 2-3 years, but it's going to be pretty close. So from that perspective, like, given that that's kind of known, you don't tend to move the multiple around. And on 26 numbers, stock's cheap. It's trading at like a 13, 14 times. So no worries there. The flex in the multiple is around autonomous vehicles. And I think the thing we were specifically calling out is, Elon gets on the Tesla conference call and starts speaking pretty explicitly about rolling out EVs next year. And, he basically said Texas is going to be fairly easy from a regulatory standpoint. California, probably a little bit harder. But now you're talking about these guys having to defend any type of market share. And this is like the weird thing. And I know you know this on internet stocks is Tesla doesn't have to go out and like set the world on fire and win every market and disrupt Uber. But if they do it in like 1 or 2 markets and they come in particularly with disruptive pricing, I was making the joke that Elon could literally like write a check from his personal wallet, subsidized price on a few hundred cars, no problem, and probably take some share. If evidence emerges of that would be my sort of biggest fear on Uber's multiple. I'm outperform rated. I think, I think going with the agnostic approach on providers, Waymo and Cruise and others that bring products to market, I think that's the way to go. And Uber is going to create a lot of value from that. But Elon's Elon, and you don't want to discount him.
Well, it's funny. You don't want to discount him, but if you had discounted full self-driving for the last 10 years and everything he had to say about it, it wouldn't have been a bad way to do it. And then I also think about
talking about it.
Well, I know, but I also, you talk about a stock, we're talking about every one of these mega cap tech stocks that have made new all-time highs in the last few months, every one of them. Now, some of them have come off of that. Tesla is still down. You do the math here. It's trading at what? 260 something. It's down from $400 in late 2021. You know what I mean? So it's one of the only stocks that can't get out of its way. Now, it still has an $850 billion market cap, and a lot of that is predicated on all of this other stuff away from building EVs. The one thing I'll just say, I was not at the Robotaxi event, but when I looked at them online and I talked to people who were there, the Robotaxis have 2 seats in them in the front. And that doesn't make a whole heck of a lot of sense to me because, how often, are people just 2 when you're getting into maybe you are, maybe you aren't. But if that's the only offering, in Waymo, you can put 3 people in the back and 1 in the front. And, it just seems like a much more practical sort of offering. I don't know if that kind of stuck out to you at all.
Yeah, for sure. To be clear, again, I don't cover Tesla, the stock. We have another firm analyst at the firm who covers that. But yeah, I think that was something that stuck out to a lot of people right off the bat. Certainly, they had the bus, right, that they brought in, and I think we can understand the use case on that one. But yeah, without opining too explicitly on it, sure, it was super surprising.
So this one, it's interesting. So I just mentioned the breakout that it had after being really range bound, and it's since given all of that back, which I thought was kind of interesting. And so I don't know if you kind of look at charts, but when I look at like a long, this was probably, 9 months or so between, $80 and let's call it, 65 or something. And it gets back up towards that 80. So it hadn't been there since February and March. And you get this powerful breakout, right? Because this meant investors were loading into this, because if they had been hesitant about what Elon and his timetable were going to put out, to your point, they were like off to the races. Well, it's since pulled back 10%. And so I think about that sentiment shift, that setup into the print. How are you thinking about that? Or how do you think the buy side is thinking about it? Because again, really what that meant was that he's not nipping at our heels right now, right? But the fact that it's pulled back, I'm just curious what you think.
Yeah, for sure. I think, obviously they got the nice pop off the event initially, then the stock kind of stayed, and then obviously it was a little weak. And Tesla reported last week and gave their commentary on getting more aggressive into Texas and California. So it was really interesting. I was actually lucky enough to have the company on the road back in May, kind of the mid-May timeframe. Stock was in the low 60s, and it was very interesting. I mean, we were spending half the conversations. We were taking them around to different investors. We were spending half the conversation talking about AVs, and they were laying out sort of their case. I think we came away from those meetings feeling like people were going to light into positions, because that was the compelling play. I still feel that way. It's just at the moment, third-party data, who knows? Sometimes it's right, sometimes it's not. It's probably pointing to a little bit of downside here in the near term. And I think there's probably some fear out there that, it's kind of like Google missing search. You play the bear case, even though it's not really happening yet. It's the same kind of thing here if you get a little bit of downside. But no, I mean, in general, I think these guys are a huge beneficiary of AVs. And so, I'm defending weakness on any moves like that in theory.
But, and just the last thing I'll say is that, if you think that in some of these other companies, there's a lot of embedded excitement about full self-driving or AVs or something like that, here's a stock that trades at 33 times 2025, 23 times, 2026, expected EPS growth on a GAAP basis, in 2025 up 100% and then 43%. That is demonstrating, a meaningful re-acceleration of earnings. And I know they just got earnings positive, let's say, a year or two ago, but mid-teens sort of revenue growth with margins that are going higher. I mean, this seems about as cheap of a stock in your universe if you believe consensus estimates.
Yeah, no, absolutely. I mean, they gave them the 3-year target, 35 to 40% EBITDA and free cash flow growth. Like I can't, when you're in my seat, you can't get valuation sensitive about that. I'm sure you could come up with examples maybe that are similar, but it's pretty hard.
All right, Brad. We covered a lot of ground here. I appreciate you digging into, 4 names, not just, ones that, again, we're not just focused just on the print. We're kind of thinking about some of the things that these companies might guide to and what are some of the pressure points. And I think the sentiment stuff is really interesting, because I know you talk to a lot of really smart investors, both long, short, and long only. So I appreciate the time. I hope you'll come back.
Sounds good. Good to see you guys. Thanks again.
Thanks, Brad.